Q4FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Dr. Praveer Sinha, MD and CEO of Tata Power. Thank you, and over to you.
Thank you, Yashashvi. Good evening, everyone, and thank you for joining for the analyst call. I am joined today by my colleagues, CFO, Mr. Sanjeev Churiwala, Financial Controller, Mr. J.V. Patil, Mr. Rajesh Lachani, and Mr. Kasturi Soundarajan from the Investor Relations, and a few other members from our finance team. Let me first put the perspective of the power sector. Last year, the growth of power demand for the whole year has been nearly 5%, and in the March quarter, it was nearly 4%. And we expect that this year also, the growth will be in the range of about 5%. Though in the month of April, we have only seen 2% growth. We do expect that this year the peak demand will increase to something like 270 gigawatts, and the way the power sector is geared up, I think we'll be able to meet that additional load. From Tata Power side also, all our plants will be operating at full capacity, so that whatever is our commitment in terms of supply, we will be able to meet. Coming to our performance, this is the 22nd successive quarter in which our PAT has grown. Our reported PAT is nearly 25% higher in the March quarter, which is at 1,306 crores, while the adjusted PAT is 16% higher at 1,288 crores compared to last year's 1,109 crores. Our Q4 EBITDA has also increased by 15% to 3,829 crores compared to last year's 3,358 crores. Coming to the full year, FY25 has been a historic year, where for the first time the company has posted a PAT in excess of rupees 5,000 crores, and underlying EBITDA has been more than 15,000 crores. While the reported revenue is 102 crores, the PAT before exceptional has gone to 5,197 crores, which is a 26% increase on year-on-year basis, and the underlying EBITDA has increased by 10% to 15,261 crores. This achievement has been possible because of many of our core businesses have performed exceedingly well. Our existing generation business has done very well. Transmission and distribution has also done well. And similarly, our renewable business has also done very well. And as we had shared with you last year, we are on track to double our PAT and EBITDA by FY30. For the year FY25, the renewable business, we could achieve capacity add of 1,026 megawatts, and for the first time we have been able to add capacity of more than 1 gigawatt. We also in the quarter commissioned 166 gigawatts of capacity, and over the years we have seen that how our capacity adds has been growing. We also have a very good pipeline of our renewable business, where nearly 5.5 gigawatt of capacity will get added in next 6 months to 24 months, where land for most of the projects have been acquired, as also the connectivity. And we do hope that our target to have nearly 70% clean and green energy by 2030 will be possible, not only with the renewable projects that we are setting up, but also the pumped hydro project, where the work has already started in Bhivpuri project, and in 1,000 megawatt Bhivpuri project, and work in 1,800 megawatt Shirota pumped hydro will start in the later part of the year. Our project in Bhutan, the 600 megawatt Khorlonchu project, the work has already started from 1st January, and we expect that by November 29, the project will be completed. In our solar business, especially solar rooftop business, our revenues have gone up by 40% in the quarter to 865 crores, and EBITDA has gone up by 72% to 132 crores. For the full year, our rooftop business had sales of nearly 782 megawatts with a revenue of 2,210 crores and PAT of 209 crores. And in the coming year, that is FY26, we expect that this will nearly double, considering that huge initiatives are being taken by us along with the government PM Surya, especially in the states of Odisha, UP, Rajasthan, Assam, and Maharashtra. We, in fact, continue to be number one in rooftop solar with our presence in more than 700 cities. Coming to our manufacturing of solar cell and module, the plant is now fully operational at Tirunelveli, and they are operating at more than 90% each. And in this year, though we started the production a little late, in the whole year we have supplied nearly 3,300 megawatts of modules. In this quarter, we could supply 913 megawatt of modules and 650 solar has reported a revenue of 5,337 crores, EBITDA of 875 crores, and a PAT of 422 crores. With both the cell and module line fully operational, we do expect that in the coming year we'll cross the 3,700 megawatt of production of both cells and modules. In our T&D business also, which actually has shown record performance in this year, in the quarter, our revenue was 9,590 crores, PAT of 616 crores. For the full year, the revenue of T&D business is 39,122 crores and a PAT of 2,000 crores. This has been possible because of excellent performance by all our distribution company, including Odisha Discoms, where the PAT has gone up by more than 3 times for the whole year. In fact, in Odisha Discoms, our PAT increased to rupees 439 crores from 307 crores in the previous year. And we do expect that with the operations stabilizing and a whole lot of work that has been done in improving the quality of service, this performance will further improve in the coming year. With all our distribution business, whether it is in Odisha, Delhi, Mumbai, and Ajmer, doing very good, the company is also looking at opportunities to expand, especially in some of the states where the distribution bidding process will start in later part of this month. And we do expect that, especially in UP, where the bid process is starting, we will be able to increase our footprint. Our balance sheet with all these investments continues to be very, very strong. We had a capex of 4,100 crores in the last quarter, and in the whole year, we had a capex of 16,200 crores. And in the coming year, we have a plan of having a capex of 25,000 crores. In spite of such large capex, we have been able to have the net debt at 44,700 crores, and our net debt to underlying EBITDA continues to be less than 3. It is actually at 2.93, and our net debt to equity is at 1.0 compared to 1.1 in the previous quarter. And because of these reasons, we continue to get the best ratings in corporate India and in the power sector. In fact, Moody's has recently upgraded the outlook on Tata Power from BA1 stable to BA1 positive. Tata Power is committed to go for very calibrated growth, and our capex plan, not only for FY26 but for subsequent years, is on track. And
evacuation issues are largely sorted to commission 2.5 gigawatts of renewable in FY26, like you targeted?
yes, this year we will commission nearly 2.5 to 2.7 gigawatt of renewable projects. Last year we actually completed 2.3 gigawatt of projects.
My compliments on your very strong performance in the solar module business operationally, both for very high levels of capacity utilization and the ramp up in cell production so soon after commissioning. But it seems that the margin performance is also very strong, and it appears to be driven by a third-party sale of modules which are integrated with cells in the fourth quarter. So is this something that is likely to continue at this scale in FY26, where you said you will have almost 3,700 megawatt of module and cell production? So how should we think about the third-party mix and if any volatility through the year that you expect because of your internal requirements, if you could talk about that?
So, as you are aware, we commissioned the cell plant in the last quarter, and it has ramped up now to full capacity. You will only see improvement of it because in the Q4 we produced 650 megawatt, while in the FY26 we are expecting more than 3,700. So you can expect the full impact of the production coming in the financial year. Similarly, the module line also has now stabilized, and you will see much better performance in the coming years. So you can assume that the plant will work at full capacity, for which all the steps have been taken by the company.
So my question was on what will be the proportion of third-party sale in your solar module and cell business, because that is not going to get eliminated on consolidation.
I think we have huge backlog of orders that we need to execute. We ourselves have large projects that is for our own company. In addition to that, we have some third-party EPC obligations which we need to complete in next 6 months. So at least till this third quarter, we do not have any excess capacity. In addition to that, as I mentioned to you, we are going to increase the supply to rooftop solar, and again nearly 1 gigawatt will be required over there. So I think we have a huge pipeline of orders to be executed, and most of these cells and modules that we will produce will get consumed ourselves. Maybe in subsequent years we might have some extra capacity for third parties.
Yeah, and just to add to what Dr. Sinha said, when we say in-house consumption, even our third-party EPC that we do, finally the profit will also boil down to the consolidated profit of the renewable businesses. So kind of if you look at a console basis, all the DCR sale that goes to third-party EPC businesses that we're doing, and we need to have a backlog of that will add up to the profits.
Okay. So your third-party order backlog is how big right now for module cells?
I think next year for sure we have about a delivery of 1 gigawatt around so to be done for the third-party EPC.
Yeah. Beyond the solar
Thank you.
rooftop.
Sumit, I request you to join back the queue, please, as we have other participants.
Yes, Sumit, it's beyond solar rooftop.
Yes.
Thank you. We'll take our next question from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah. Good evening, sir, and thanks for the opportunity. So my first question was, there was a news in the media that you are thinking about the exiting coal business. Is that true? If true, are you also exploring organic growth?
Yeah, I think there are mixed reactions that we see in the papers and all. I think as Dr. Sinha said, we will be opportunistic. If some opportunity comes, we will see. But as of now, we're kind of more determined to ensure our capital allocation goes to our growth businesses, which is in the renewable and transmission and distribution.
Understood. So my second question is, there's a note number 2, which talks about some adjustment of the from the CRC judgment. What is the impact of that note number 2 in this particular quarter?
Yeah, this quarter. So there is no impact in this quarter. This pertains to the earlier quarters, which we've already disclosed. The CRC order dated 3rd January 2003.
Yes. You see, they issued the final order claim of, so you have trued up the amount. So that's what it says. That's why I'm trying.
This order is kind of more supporting us in terms of collecting our receivables.
So it is not material impact in this quarter. Is that right?
Yeah. So there's no impact on the P&L because to that extent, as and when we are selling, we've been also been booking as per the MOP orders. So there's no impact on the P&L.
My last question, is it possible to break up the capex layout across the various businesses for FY26?
We have about the capex layout of close to about 25,000 odd crore for next year. And if I do a breakup, around 60% of the layout allocation will happen in our renewable businesses. And given that we're also growing our transmission and distribution capex, about 30% odd will go there, and the remaining others. But this will remain dynamic. This is the broad allocation as we are starting the year, but depending upon the situation on the ground, the allocation might change.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. We'll take our next question from the line of Apurva Bahadur from IIFL Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. Couple of questions, sir. Firstly, on the cell module manufacturing business, I see in your presentation that we have commissioned a TOPCon line, pilot line as well. Would you mind throwing some update on that? I mean, when do we intend to upgrade our PERC capacity?
Upgrade mono capacity. So right now we will continue with the 4 gigawatt of mono PERC and 300 megawatt of TOPCon. So that whatever technology we have used and the efficiency that we are getting, we maximize on that. Whenever the opportunity and the market demand is there for TOPCon, we'll examine it at that stage. But right now we will continue with the operation of these lines.
Okay, sir. And sir, given the strong utilization which we are seeing for our cell module line, is there any plan to add capacity over here?
We keep on examining these type of proposals. At the right time, we will take a call.
Okay. Lastly, I wanted to understand our strategy for Tata Projects. I think we have been holding this business for quite some time, have been getting diluted here. Twice there has been a rights issue. So, how do we sort of, sir, look at this business? The intent, is it to hold it till a possible listing or maybe a sale to the parent at some time?
So, as you are aware that Tata Projects came up with rights issue, and since we are now focusing on our core businesses, we have not subscribed to that, and we want to use our money for our own capex growth, which we have planned. As far as Tata Projects is concerned, they have an ambitious plan, and hopefully in the next 1 to 2 years, they will perform very well and start making profits. And maybe at the appropriate time, Tata Projects management will take a decision on what they need to pursue to make it more robust in terms of their listing or whatever they have to do.
Great, sir. One last question, if I can squeeze it in, and this is regarding the ordering for the wind plants. Wanted to know if we are through with all the orders that were to be placed.
Yes, in the final stages, hopefully next 3 to 4 weeks we'll come.
Understood, sir. Thank you so much. All the best.
Thank you.
We'll take our next question from the line of Satyadeep Jain from Ambit Capital. Please go ahead.
Hi, thank you. First, Mr. Sinha, just a clarification question before I ask the question. To what you responded to Mohit's question on the media articles around thermal. It seems you indicated that you'll be, if there's an opportunity that comes along, you may look at it. Is that a strategic change? Because the earlier target was that you'll phase out all the coal plants that you have by 2045 or something. Is there a change in that strategy that you might be opportunistic and you may not phase out all the coal plants, you may look at more? I know the word opportunistic, but that means you're open to evaluating different opportunities and there's a change in strategy. Just want to understand that.
So our end date of 2045 continues to be there. So it's not that that end date of where we will divest or we will close down the plants by 2045 for all the coal-based plants where we have the PPAs. But as I mentioned to you, if there's some stressed asset or some asset which is there, and typically they would have been in operation for some period, we can look at that. But these are again very speculative at this stage. There is no plan per se that we are immediately going for anything like that.
Okay. Just on the RE, I know you acquired more ISTS connectivity, and there have been some delays in transmission evacuation. Now, what is your intent? You're acquiring more transmission connectivity, and given your targets, would you, given the issues we've seen in transmission ROW, is that why you're holding off on maybe more aggressively building pipeline beyond the next 2 years? What's the thought there, and what's driving that strategy, whatever, maybe exercising caution on building future pipeline?
So, as you are aware, that there are challenges in acquisition of land and getting evacuation permission. So, as a long-term investment strategy, we continue to acquire land in various places, as also keep on applying for connectivity so that we don't have to start looking for it when we win the projects. And as you are aware, we do large number of projects, not only utility scale, but also under group captive for various industries, as also for many of the group companies in Tata Group. So we definitely would be quite aggressive in acquisition of land, as also getting the necessary connectivity from these locations.
Okay. Just one question, if I can squeeze on. very high margins you report in rooftop solar and also Odisha Discom. I think there is some ECL provisioning right back you've done. I just wanted to understand that ECL provisioning and what basically drove the profitability in Odisha and also the rooftop solar. Thank you.
So Odisha Discoms is a different business and has nothing to do with the rooftop, excepting for the fact that they do support the rooftop initiative that we take in Odisha. So I think we need to look both of them separately rather than trying to.
No, sir, separately, but just wanted to understand what happened in those two different businesses. Just why did you, what led to high profitability in solar rooftop in that quarter? And also separately, the Discom also reported very high profit, and it seems like there is some ECL provisioning right back, or just wanted to understand two different businesses, what led to the good performance?
Yes. So I think you're right, there are two different businesses. On Odisha, of course, as you can see, there's a continuous reduction in the AT&T losses. Better efficiencies have come in, better billing and better collection has happened. And backed on this, we have a better profitability. There have been some ECL provisioning in terms of clearing up some of the past dues. But even after providing for those ECL provisioning, we delivered a very good set of numbers in Odisha. And hopefully, we've created a good baseline to kind of grow from here. So that's on the Odisha. On the rooftop businesses, I think the fourth quarter has been a phenomenal quarter for us, where we have delivered, good growth. When you look at the numbers of rooftop, for the quarter, we kind of delivered close to about 850-870 crores in terms of the top line revenues, with a very healthy PAT margin. And that demonstrates our ability to, penetrate the market, capturing the market share, getting a premium for our product based on a high amount of trust that the consumer has. We are kind of operating with 600 plus channel partners, and we want to ensure that the growth that we have in the fourth quarter, we can continue this growth in the coming quarters as well.
Okay, thank you so much and wish you the best.
Thank you. We'll take our next question from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity. So one clarification, sir, the government of India has come out with the Shakti scheme, the new Shakti scheme, where they allowed imported coal-based power plant to source coal from the domestic sources. Do you think it makes sense for Mundra to tie up the domestic coal under lockdown?
See, the Mundra plant is designed for imported coal, and imported coal has different chemical characteristics. So it's not just the heat rate, but what is the sulfur content, nitrogen content, what is the ash content. So there are a whole lot of chemical characteristics that it needs to comply to. So बंद हो गया इसने कुछ दबा दिया तो बंद हो गया.
We can hear you, sir.
कौन चल रहा है? Okay. So we need to consider all these aspects when we go for change in coal. So because of that reason, for us, it does not make sense to go for domestic coal. Secondly, the cost of coal, if we get from eastern part of India, especially in terms of the transportation cost, is very high. And for us, until and unless we are able to have a very differentiated arrangement which brings down the cost of coal, as also bring down the transportation cost, it will not make real sense to move to any other coal than what we are using at present.
Understood. The second question is there any update on the financial closure of the pumped storage power plant which is building up, the SSG, the 1000 megawatt?
So yeah, we are working on the financial closure. The discussions are happening with the banks. We've just started the work. So we still have a few months to close that.
Yeah, but the work is going on at the pump storage project. So notwithstanding the financial closure, the internal accruals is supporting the investment that is required for the project.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. We'll take our next question from the line of Rajesh Bhojani from Energy Tech. Please go ahead.
Hello, sir.
Yes, Rajesh, we can hear you. Please go ahead.
Yeah. Thank you, ma'am, for the opportunity. I was interested if the company is expanding in battery energy storage system.
Yeah, we set up those projects as a part of the complex renewable projects. So we arrange source of batteries from suppliers and combine it with solar and wind projects that we set up. So it's a part of the hybrid solutions that we are implementing.
Yeah, sir. And are there any challenges in the renewable sector in point of view with the government policy?
No, there are no challenges. Nothing like that.
Okay. Thank you.
Thank you. We'll take our next question from the line of Bharanidhar from Avendus Spark. Please go ahead.
Yeah. Am I audible?
The volume is a little low.
Yeah. Is it better now?
A little
I
better.
will go ahead
Please
with
go ahead.
Okay. Just wanted to understand some operational and financial metrics on the Mundra coal and shipping line item in the cluster-wise performance slide, where we have seen a very good improvement in profitability and PAT in FY25 versus FY24, meaning 57 crores of PAT going up to 107. So what is driving this, and some color on how much spread we are making per unit in Mundra and what would be the outlook for 26? That will be great.
If you're looking at the full year PAT, there are a couple of things there. A is, of course, the last year and this year, the plant continues to run on Section 11. Last year, 1 unit was down, so we were running on 4 units. This year, we're running all the 5 units. So to that extent, there's better contribution coming through. And that's the key reason. And there, we had one of the regulatory upside coming in for Mundra, which was pending for the last almost a decade now, which has been reported in the earlier quarters, almost, I think, 32 odd crores. Right? So that is because of that.
Understood. So what would be the outlook for 26, sir, in the sense regarding Section 11?
It all depends. It's too difficult for us to predict the outcome for the entire year. So as of now, the Section 11 has been extended for 2 months, and we're also trying to very amicably work along and get into a revised PPA with them, with the government. So it's too early for us to kind of comment as to how 26 will look like. But we're working towards the resolution.
Understood. And some updates on the UP's privatization of DISCOMs and where is it at and when it is likely to be opened, the bid, that will be helpful.
I think UP have appointed consultant to work on the bid process for 2 DISCOMs. We are also part of it, and hopefully we would like to do something out there. But I think it's still work in progress.
Okay, thank you so much. All the best.
Thank you. We'll take our next question from the line of Atul Tiwari from JP Morgan. Please go ahead.
Yes, sir. Thanks a lot. Sir, again, on the pumped storage plants where you have started the work, what is the status of long-term PPAs there? Are you looking at something? And in case the PPA is not there, do you think the financial closure will be possible from financial institution side?
So, pumped hydro is being developed to basically give bundled power along with solar and wind. This will be done for both the utility scale projects as well as for many of our C&I customers. This is a work in progress. This will take at least 6 more months for us to get finalized, so that we have a maximum value for the investment that we are making in this project. As you know that many of the companies have to go for 24/7 renewable power, as well as many of the DISCOMs are wanting to do that. Pumped hydro has a unique ability to give us this power 365 days for 8 hours every day. So I think we need to position it in such a way that whether industries or utilities, if they want certainty on the pumped hydro plant, they will be going for this along with the other renewable sources.
Okay, thanks.
Thank you. We'll take our next question from the line of Anuj Upadhyay from Investec. Please go ahead.
Yeah, hi. Thanks for the opportunity, sir. So firstly, on the EPC margin, excluding the rooftop segment, that still struggles to cross 5% at an EBITDA level if we see for the Q4. So the reason behind that. And secondly, your wind PLF continues to struggle to cross 20% kind of a level. So what actually has been impacting the wind performance out there?
No, I think if you see the presentation that has been uploaded, I'll just tell you the slide number. And if you see the EBITDA margin and PAT margin is consistent about 5%, and the EBITDA margin is beyond that, closer to 8 to 9%. And that's the targeted rate range we want to be in. So I think we're doing absolutely fine with respect to margins in our businesses.
Sir, so I guess the consolidated margin comes at around 8 to 9, but the EPC is still in the range of 5 to 6. I'm referring to your slides only, sir.
Yeah, our EPC business, if you look at it, we are delivering a margin close to 5%.
Yeah, so I mean, initially, the sense was that the EPC segment, excluding the rooftop, I'm saying, could scale up a level of around 7 to 8%. So that time we had this concern that we had orders which were at a low margin business, and we had actually executed those low margin EPC work. So the upcoming orders would be of a healthy margin. But still we see the margins to struggle somewhere in the range of 5 to 6% only.
I don't know which we kind of missing your expectation. In slide number 62, for the quarter for the year, we delivered 8.3%. For the full year as well, we're delivering at 5%. And throughout the EPC business, and I think for the last couple of years, we have said that we kind of want to maintain a margin profile of 5%. So that has been very consistent as well. And it's kind of done better than the previous year now. If you see for the last full year, when the margin was 3.3%, I very clearly remember we said that we're targeting 5%, and this year we are delivering 5%.
Fine, sir. I'll take this offline. And on the wind side?
On the wind side?
No, wind PLF, which continues to struggle at around 20% PLF.
Yeah, so see what happens is whether it is wind or solar, what we need to ensure is the availability of the plant. And availability of all these plants have been in the 99 to plus range. The PLF is dependent upon the wind speed or what is the solar level. So last year the wind speeds in many places were not very good, and that is why the wind PLFs are low. But our plant availability continues to be very high in all these.
Yeah, I think to be very precise, slide number 61 of the presentation has the full detail. And normally when we look at the wind PLF, we have the zone of 19.5 to 20%. And you know, that is what perhaps is the right zone.
Okay, sir. And lastly, sir, of the 1,078 crores of PAT which we have reported for Mundra coal and shipment category, can you specifically mention how much was contribution from Mundra in it?
it's a combination of various things, but we can send it to you separately.
Thank you.
Fine, sir. That's helpful.
Take our next question from the line of Aniket Mittal from SBI Mutual Fund. Please go ahead.
Yes, thank you for the opportunity. My first question is on the cell and module operations. So just to understand, could you talk about what sort of realizations you'll be getting in the market for these external sales, both for the DCR and non-DCR module sales? And secondly, sort of heading into FY26, what sort of EBITDA margin do you think this entity can throw?
See, as I mentioned to you, we are not selling these modules, DCR modules as such. A very small quantity we sell depending upon the timelines in which it is required. Mostly it is being used in-house for our in-house projects or for the third-party EPC that we are executing, for which we already had an order earlier with us. So to that extent, we may not be able to share what sort of price will be applicable for the sale of just the DCR modules. You can see the margins which is there. The Q4 margin is just an indication. Going forward, it will further improve because the efficiency and the yields are improving. So you can consider a much better returns and a much better margin in the future quarters.
Okay. And just one bookkeeping question for your Tata Power Solar EPC arm. What's the overall order book currently?
11,000. It should be about close to 11,000 odd crore.
This includes rooftop?
Rooftop is separate. This is the large utility scale.
Okay, 11,000 and about 1,000 rooftop, right?
Yes.
Yeah. Just to clarify, this 11,000, how much would be external and how much would be for own Tata Power projects?
Around 4,000 would be external and remaining would be our.
Got it. Thank you. There's no question.
Thank you. We'll take our next question from the line of Rajesh Mazumdar from B&K Securities. Please go ahead.
Yeah, good evening, everyone. So I had another question on the Odisha discoms. We have seen a sharp jump in the profitability in Q4 as well as for the year for the Odisha discoms. So how sustainable is this, and what would be a kind of long run kind of path we can assume from this? Will it be slightly lower than this, or will it be slightly higher than this?
So Odisha discoms had huge challenges because there were a lot of issues regarding billing, collection, meters, and there were also large old outstanding. We have been able to take care of all those things, including ECL provision. And what you have seen in Q4, similar trend you will observe because the whole process has now been streamlined, and the performance in the future quarters will be consistent to what sort of performance we have seen in Q4.
Yeah, and so a related question on this. I mean, we've seen a lot of other discoms also being bid by some other companies, but we've not seen the kind of success in the other discom privatizations as we've seen in the case of Odisha discom. So what is going on so good for you guys that is not going on so well for the other people that is distinguishing it? Any qualitative color on this?
If you come here and spend some time, we'll explain to you what we do. Because not be replied in 2 minutes. So you have to come and understand what we do and how we are unique and different than anyone else.
Yeah, I think it's still better you can take a visit to Odisha. We can facilitate that.
Right. And so also because, you're also bidding for other discom now, are we going to be, having in the same kind of returns in UP discoms as well? Because, as I said again, the peer group experience is not as great as what we've seen in the Odisha discoms.
So you should know that today we are the biggest private company in distribution, and we are the sum total of all the others put together. and no one has the type of experience and the domain knowledge as we have, because we have done work in urban areas as well as in rural areas. So we have a huge edge compared to anyone else.
Right, sir. And sir, my other question was a bit of a general question for you, because we've always said in the last couple of calls that the peak demand is likely to hit 270 this year. But so far, the demand trends are not showing anywhere near that number. So I know last year we had a base effect kind of impact on the power demand. Is there any risk of the power demand again being in low single digits this year?
So last year we had the peak of 250, and this year, based on the data that we have from IMD, they are expecting that it will go to 270. So it all depends. The summer has just started, and we normally have a long summer right up to October. So let us wait and watch.
The peak demand was hitting May, if I'm not mistaken, last year, and we're already in the middle of May now. That's why I asked this question.
Yeah, but there have been situations where peak demand have been in July also and in October also. So it depends on how the weather condition is there. And apart from the heat, it is also the humidity which has a huge factor on the usage of electricity. So let's wait and watch.
Thank you. Thank you.
Thank you. We'll take our next question from the line of Sumit Kishore from Axis Capital. Please go ahead.
Thanks for the opportunity again. My first question is, to Dr. Sinha. You had articulated the opportunity and keen interest that Tata Power has in the nuclear and SMR market that is likely to open up to private sector. Has there been any progress in terms of any tender invited by the government for private sector participation? We were reading that there were some companies which had evinced interest. Has that moved forward?
So we are waiting for the change in the law, wherein the government has to amend the law and allowing private sector participation in nuclear power plants. Also the civil liability law. And once we get more clarity on that, we can share with you our plan to implement SMRs and other type of nuclear plants.
And just a follow-up question on this UP privatization. We are reading that or hearing that 5 circles are going to be sort of demarcated for private sector participation. So is there any condition that one private player can not take more than 1 or 2 circles, or you can take more than?
We are still waiting for the bid documents. They have appointed a consultant, and what I understand, by end of this month, the bid documents will come and we'll get a better clarity on that.
Sure. Thank you so much, and wish you all.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Dr. Praveer Sinha for closing comments. Over to you, sir.
Thank you very much, and it was a pleasure interacting with all of you. If you have any further questions, you can please connect with my colleagues, Rajesh and Kasturi. And also, if some of you want to visit the Visa Discom, what changes we have made, what technology interventions, customer engagement and customer services that we are offering, I would request if you could plan the same. Also, at any stage you want more data, more information, please don't hesitate to connect with us, and we will take your feedback to improve the quality of presentation, as also to provide you more data, which will help you to make your reports more objective. So once again, thank you to all for joining.
Thank you, sir. On behalf of Tata Power, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.